Okay, it's Wednesday, August 16th. This is an end of the day SPY recap. Third day of the week. You can see here we have another two down continuation red day. Price never crossed above the midpoint of the prior day. In a second, I'll show you how we kind of opened up inside of yesterday's range. We kind of were expecting yesterday's low to be tested after seeing a big red bar, and it tested it and then had a logical pause, and then it continued lower for the rest of the day to close near the lows of the day. So obviously you get a little bit of short-term exhaustion risk now. We know the trend's down. We've been talking about that for a while. The weekly chart has been red for 3 weeks now. On the move on Monday, we never crossed above the midpoint of the prior week, and then we reversed lower, so it's not surprising with continuity down on the weekly chart. On the monthly chart, we're still inside of the previous month, but we're getting closer and closer to a two down month, which has all kinds of continuation into this gap here between the high of this bar and the low of this bar, fair value kind of area if we head down there. And we're kind of waiting for the weekly chart to turn up, which would, the first sign would be something that would kind of get above the open of the week and turn at least the week green. And eventually, if we kind of didn't really rally up to get a two-up week, then we might, assuming we kind of moved up a little bit, we'd have to get a two-up week next week to kind of confirm any kind of change to an up bias. So we have a down bias. If we look at today's price action, it was pretty clear. Again, this first move up out of the gates with the pre-market range between the blue lines was green. You kind of moved up on bar two, but at this point, there's no real need. The only way to consider buying this type of thing is if maybe you took out the low of the previous day first, and then you were coming up strong to the midpoint of that day. You were nowhere near that, and you wanted to, maybe anticipate a big 3 day to the upside, a reversal. But there was no signs of that, so you're not really looking to buy this. And now you're kind of watching it, at least I was, and the market had one attempt up, pause, second attempt up, pause, third attempt up, and finally when it couldn't do that and you kind of anticipated the lows of yesterday being taken out, you still had liquidity down here in the pre-market lows. This red bar was a good opportunity to buy puts, and I did that. I shot a video, which, I'll show you in a second. But anyway, it moved down as anticipated to the low of the day and the low of the pre-market. It paused there, continued lower. Now what you had here was kind of an orderly push up, then another two down bar. It did reach its target and took out this intraday low. And so if you even did this secondary trade and it reached that target, you had a little short-term gain. At the worst, you could have broken even once it really rallied back up. That was all you expected. Now, again, I talked about how in the downward moves, either you're going to get them out of the gates, moving lower, or you're going to get price action kind of moving up to take out liquidity, failing, and then going lower. And that's what happened for the rest of the afternoon. Moved up again just to take out the stop kind of these bars here. There's a little fair value gap in here. Moved up there. Then you had the two up, two down red bar, and that one really closed the market weak for the rest of the day towards the close. So, like I said, I bought those put options at the 445s at 281. I scaled out to set up an overage trade at 330. They ended up closing at 525, asking 540 here towards the close. So it was a good, day to trade to the downside today, just like yesterday. Yesterday was more out of the gates. Today it was a kind of a little green pause to red move, but it was the only way to be, to consider given the overall structure of the day, was below the midpoint of the prior day, and the weekly and monthly charts were both red and never really even had any price action that started even trying to turn this chart green. So we continue lower. I think there's a little bit of exhaustion risk. I mean, I'll anticipate that low being taken out tomorrow, but it gets a little tricky with 2 days to go in the week. If like I said, I've seen days where you get 3, 4, 5, 6 days in a row down. So you can certainly, depending what the structure is tomorrow, you can try short trades. I see no, but even if we get a little bit of a rally up here, anything's possible. The only actionable signal, and it's not even really an actionable signal, given that the continuity to the downside would be like anything that threatens to be a two up day. You could try that if it develops, but just know you're kind of going against the trend. But after some exhaustion risk, if we get some kind of strong opening up above that bar, you can always try it. You never know with 2 days to go in the week if this is going to close with a big, reversal bar. But other than that, your bias to the downside. I think the 2 easy days of trading were these last 2, but we'll see, if the market's really weak, it could continue lower, and you'll kind of just have to judge how price action, opens tomorrow relative to the pre-market range as always, to see if the opportunities look good or not. But good day on the short side today, and we'll see where it goes tomorrow.